Hello everyone, my name is CMA. Welcome back to CMA Modules. In this video lecture, we will be recording accounting for joint venture. Joint venture accounting is similar to consignment accounting to a greater extent. Here also we will have two parties to the accounts. We'll have a joint venture. Now what is joint venture? If I try to understand in a simple layman language, so joint venture is a small is a uh, accounts, or else I'll enter into a transaction with a party for a very small period of time, say for 6 months, 7 months. Once that project is completed, I'll close the venture. Once the period is over, I'll close the venture. Sometimes the venture goes on for a longer period of time, sometimes for a shorter period of time. So they are usually created for specific item. Joint venture is a short-term business undertaking jointly by two or more persons who share the profits and losses in an agreed ratio. Joint venture is a temporary form of business organization. There are certain business activities or projects that may involve higher risk. So joint venture is a short-term business undertaking jointly by two or more persons who share the profits and losses in an agreed ratio. Joint venture is a temporary form of business organization. There are certain business activities or projects that may involve higher risk, higher investment, and even they demand multi skills. In such cases, an individual person may not be able to muster all the resources, so he is required to enter into a transaction with some other person. Two or more people having requisite skills may come together and may form a temporary partnership. So that is nothing but called as joint venture. There is a memorandum of undertaking signed for this purpose. So we have concept. A joint venture is a business arrangement in which two or more parties agree to pool resources for the purpose of accomplishing a specific task. This task can be a new project or an or other business activity. So what is concept of joint venture? Joint venture is a business arrangement in which two or more parties agree to pull their resources for the purpose for accomplishing a specific task, and this task can be a new project or it can be any other business activity. So that's the concept. Now, characteristics of joint venture. Again, theory of joint venture is very important. In form of objectives can be asked, one word, one answer, one line answer, long answers can be expected. Features of joint venture. Following are the salient features of joint venture from the form of business. There is an agreement between two or more persons. So there is an agreement between two or more persons. Joint venture is made for specific execution of business plan or project. It is a temporary partnership without the use of firm name. Profit and share are shared on the same terms and conditions agreed upon. However, in the absence of any agreement, profit and share will be divided equally. The terms of joint venture are executed on a written agreement signed by all the parties involved. This document will state that the parties are willingly assisting each other and will contain other terms as such duration, models of association, liabilities, etc. So we have there is an agreement between two or more parties. Okay, there's an agreement between two or more persons, not one, more than one, two or more persons. Joint venture is made for specific execution of the business or plan or project, not for everything, for specific project, specific business, specific plan. It is temporary partnership without the use of the firm name. Temporary partnership, even if you don't name that venture, that is fine. So it is formed for temporary period, not for a longer period. Profit and share are shared on the same terms and conditions agreed upon. However, in the absence of any agreement, profit and share will be divided equally. So profits and share are shared on the same term and conditions agreed upon. They are shared on the same terms agreed upon. However, in the absence of any agreement, profit and share will be divided equally. In absence of any agreement, it will be divided equally. The terms of joint venture are executed on a written agreement signed by all parties involved. This document will state that the parties are willingly assisting each other and will contain other terms also. So if there is absence of any agreement, the profit and loss will be shared equally. If there is any agreement between them, it will be shared in the agreed ratio. Then we have the terms of joint venture are executed on a written agreement signed by all the parties involved. This document will state that the parties are willingly assisting each other and will contain other terms as such duration, models of association, liabilities, etc. Joint ventures are of short duration. Such associations are temporary. So again and again the points are repeated, but to understand it in a smaller, simpler way, it is agreement between two or more persons. It is for a temporary period. It is for a specific project, plan, or business. It may or may not have a firm name. Your profits and losses are shared in the agreed ratio. If no profit and losses, it will be shared equally. The terms of joint venture are executed as on a written agreement, and joint ventures are for a shorter duration. Then we have parties in joint venture. The parties who have agreed to undertake joint venture are called co-venturer or joint venturer. It is exactly same as partnership with the exception that it is one of the business that is to be terminated after the venture period is over, counting from the time from when it has started. So we have parties in joint venture. So what is parties in joint venture? The parties who have agreed to undertake joint venture are called co-venturer or joint venturer. Okay, the parties who have agreed to undertake joint venture are called co-venturer or joint venture. It is exactly same as partnership with the exception that it is one of the business that is to be terminated after a venture period. So here it is exactly similar to partnership, but here we have an exception that the venture will be terminated after the venture period is over, counting from when it has started. Since it is to be terminated after the period of completion of the venture, the firm name is not generally used. It is a temporary partnership with or without firm name. If there is no agreement concerning the sharing of profits or losses between the co-venturers, it is shared equally by all the parties. So we have parties in joint venture. So what all are the parties in joint venture? We have co-venturers, okay, or joint venturers. They are known as co-venturers or they are known as joint venturers. It is exactly same as partnership. It is exactly same as partnership, okay, with an exception that it is one of the business. It has an exception that it is a business with a temporary period. Here they share capital, here they share the expertise, they share profit and losses. Okay, if ratio is decided, they'll share in that ratio, otherwise they'll share equally. Difference between joint venture and partnership. Important answer. There are following differences between partnership and joint venture. Partnership always carried on with firm name, but for the joint venture on such firm's name is required. The person who runs the business or on partnership are called as partners, and the person who agreed to take the project as joint venture are called as co-venturers. Normally, a partnership is constituted for a long period, whereas joint venturer is formed to complete a specific job or project. So here we have difference between job when joint venture and partnership. A small read is fine. Joint venture and consignment, again a small read is fine. Important answers. It is very easy to understand. Now I have illustration number 18, and then I have few journal entries, and then again we have few sums. So what they have mentioned under illustration 18, A and B enter into a joint venture sharing profits and losses in the ratio of 3:2. A purchased goods costing rupees 2 lakhs. B sold 95% of the goods for rupees 2 lakh 50. A is entitled to get 1% commission on purchase and B is entitled to get 5% commission on sales. A drew a bill on B for an amount equivalent to 80% of original cost of goods. A got it discounted at rupees 1 lakh 50. Calculate B's share of profit. So we have sales here 2 lakh 50,000. Then we have closing stock 5% of 2 lakhs. So see, they have given us A purchased goods costing 2 lakhs and 95% is sold. So 5% is still in stock. So 10,000 is in stock. So total goods are 2 lakh 60. Out of this, what I'm supposed to do? I'm supposed to remove my expenses. So purchase expense, commission expense and discount charges. If I remove, I get a profit of 35,500. I hope you are comfortable till here. From accounting of joint venture, I'll go for one more video lecture. Thank you.